Hello everyone, today we're going to talk about 7208 usual holding, bad company or good stock. So this is Nicole from Homely Chat. Statement: the main purpose of this course is to learn the methods and techniques of share investment. It does not constitute any recommendations or trading tips. Any risk or profit is irrelevant to the company and myself. Trade at your own risk. Okay, so for today's course, there will be 3 parts. The first part is about usual holding, bad company or a good stock, and the recent performance of usual and investment strategy of usual holding. So let's talk about the first part, bad company or good stock. So this is the chart of usual holding from 2018 until 2019, and what can we see from the performance of price? We find first, the whole direction is downward, right? Which means the longer you hold, the more money you lose. And the second is, if we observe the candlestick, we find candlestick is not normal actually. You will find it that they're full of like this kind of dash, right? Or it's just like a T-shaped candlestick. It's very abnormal. If your share is full of this kind of candlestick, which means the volume is not enough, your share is not active. So for this kind of share, maybe we will easily know, okay, this company might be not a good company. But we can see here, this is the chart from 2019 to 2020, and we can here is around from January to March this year, and we still remember the share market drops a lot. But if we see this share, actually it rises some and be sideways, do not fall, and then create a new high and in sideways. So this share is very strong then. But is there any change of the company? Actually no. For this share, there's no any good news. Just around January or February or March, there's no good news. So company is the company, but the price is different, or there is some good news, but retailers just don't know. And many of our of our members, they catch the share, but not around here. But later, we will see later. And for this share, okay, maybe now you can judge by comparing with the dropping market. You think this share is very strong. Then do you dare to chase high here? Maybe some person do not dare. Why? Because they do not so confident about the share will rise. They do not know who is controlling the share. So to talk about this problem, we need to know the subjects of stock market transactions. So they're divided into 2 categories, institutional investors and individual investors. So for individual investors, there's government agency, corporate and the business legal person, financial institution. So financial institutions participating in security investment include securities business institutions, commercial banks, insurance companies, etc., and funds. So institutional investors of funds include security investment funds, social security funds, and the social welfare funds. So this is about institutional investors. And according to the amount of money and their trading style, we divided them into 2 different types of institutional investors, what we call bankers and hot money. So if the amount of money is very large, then we call it bankers, and the trading style is very stable. So if the amount of funds is relatively small, then we call it hot money, and the trading style is faster, which means fast go in and fast go out. And the second category is individual investors, what we call retailers. So retailers, they are the most extensive investors in the security markets. So this is about bankers, hot money, and the retailers. So now we know who is the subjects to participate in the market, then how to follow them. So we need to use an indicator in Homely software. It's called MCD. We find here there are three colors: green color, yellow color, and a red color. So if we see green color, they are retailers. Retailers cannot push up the price. And then these two, yellow color and the red color, they are institutional funds, and the yellow color is what we call hot money. So if your share is controlled by hot money, your share will be in sideways. It will not drop much, but it will not rise much as well. It will be in sideways because hot money they trade in short term. And then bankers. Red color is bankers. If your shares with bankers in, and it will have a good performance. So let's see this share. So this is the chart from 2018 to 2019 of usual holding, and from this chart we find they're full of green color, right? And that's why the share cannot rise, because not much institutional investors in the share but retailers. And we mentioned if your share is controlled by retailers, then it will in a bad direction. And this is the chart from 2019 to 2020, and we find around this area. Remember, we shared yellow color and the red color. They are institutional investors. So institutional investors now are more than retailers. And from this area, we find price is in sideways. Why? Because hot money is controlling the share. If you observe when bankers increase, you will find price is in a good performance. So now we see bankers increase a lot. So is there a chance that we should focus on the share? Yes, of course. If we see its future performance, we find from this day. You can see the 25th March to 27th August, the share rise around more than 600%, is around 700%. So this is the performance of this kind of banker shares. It's very strong. But actually, many of our members, they catch the share around this area. And when they are trading the share, and there's no good news of the company. And when I take this share as an example to share how our members can trade this kind of share, and many non-members, they say, okay teacher, this share is a really bad company. But we know there are bankers in it, right? So bankers, they always know some news earlier than us. And this one is Top Glove weekly chart. So we know Top Glove is a good company. Okay, but we know from here to here, the price just be in sideways. It does not fall much, but it does not rise much. So the time of this duration is 2 years. 2 years sideways. Why? Because bankers is decreasing. So if you have the chart, even you trade in long term, but you can totally enter the share around this area, and then after you enter the share, you can get some good performance, some good profit. So even some good company, they may in a certain period of time do not have such good performance on the stock price. So what we know is the essence of rising stock price lies in the inflow of large funds, and the essence of continuously rising stock prices lies in the continuous inflow of large funds. And information between what retailers know and what bankers know in the market is different. And there's not only one banker in the stock market. So for retailers, it is much more reliable to track the big funds of bankers than to listen to some insiders' news. And then let's talk about the recent performance of usual holding. So this is usual holdings chart, and let's see its funds first. Okay, we find there are a lot of institutional funds, which means little retailers and many hot money and many bankers. So sometimes banker decrease here, banker increase here, decrease here, increase here. So this is what we know. Bankers will trade some short-term short-term as well. But for us, how we trade this kind of share? So if you want to filter some share, then you make a share like this. Okay, banker increase, and you find, okay, banker is above 50, and there's no retailers, so this is a good funds. And then if you want to trade this kind of share, you need to see the direction. So first, let's say it's midterm direction. This indicator is called BBE. You can see the indicator's name here. So there are two colors here. The red color is midterm support. Green color is midterm resistance, a downward direction. And the red color is midterm upward direction. Okay, so we know now the share is in midterm upward direction. So this is what we know. But if we want to trade the share, we need to know the definition of rebound and the correction. Okay, so you can see the share goes down here in a downward direction, but there is a still upward gap. You can see here some big green candlesticks. But if you trade here, then what is waiting for you is, you can see a new low point than here, a new low point than here. So even in downward direction, there is a stock rising price, but it will be very dangerous for us to trade. And it's just like this. When price goes down, okay, there is some rise here, but the main direction is downward. And let's see what about in uptrend. In an uptrend, we find here is downward gap, right? It falls fiercely, but if you leave the share here, then you will miss its further rise. If you leave here a big downward gap, you will lose the further rise. So this kind of falling actually is a fake falls. So when the direction is upward, okay, it will be normal for the share to rise. But if it goes down, if price goes down, and then when it meets the support, it will goes up again. Okay, when it goes down, it's just normal, and it will goes up again. So if it goes down and breaks down the support, okay, then we can leave here. So this is about the falling in an uptrend. It's very normal, it exists, and only the last time when it breaks down, then is our exit point, or we can still choose to hold the share. So the rise in downtrend is what we call rebound, and the fall in uptrend is what we call correction. So why we need to know about rebound and correction, especially rebound? Because we know in share market, only when price is rising, we can make money. So when price will rise, in uptrend, of course, price will rise, but in downtrend, price will have rise also. So you need to make sure you are trading in an uptrend or you are trading in rebound. So now, if we go back to euro holding, when we study its short-term direction, actually we will use the knowledge. So this indicator, you can see there is actual one indicator. It's called red and white circle. You can see there are red circles, white circles. So this indicator is called red and white circle. The first red circle we can choose to enter, and the first white circle we can choose to leave. Okay, so is here the first red circle? Yes. So is it an entry point in short term? Yes. Okay. Is here and the first red circle? Yes. Is here an entry point? Yes. Is it the first red circle? Yes. Is there an entry point? Yes. But the performance of price is different. You can see here it rises much, but for here you do not make money, or you maybe lose a little bit money. So why? Because the midterm direction is different. You can see for the second point and the third point, there is a red band, which means the midterm direction is upward. So you are trading in the rise in uptrend, which is very normal. But you can see here, it's green band. The green band is what we call midterm downward direction. It's midterm resistance. So when midterm is downward and the short-term price starts to rise, is what we call rebound. So here is a rebound point, and you can ignore it. So this is how we trade euro holding, and the latest entry point is this one, right? The first red circle in uptrend and with the banker increase. So here is a good point, and the date of this day is 12th November. 12th November, the close price is 2.5. And then next topic is about euro holdings investment strategy, because for some investors, they do not focus on the share when it's 12th November, so they need another entry point. So if we see daily chart, there's no entry point, then we see 60-minute chart. In 60-minute chart, you can see here is green to red, right? And then the date here is 9th November, and from 5 p.m. or 15 p.m. to 16 p.m. And the price is 2.1, and then it's a red circle, so you hold. Okay, you see price fall here. Price falls here, but you still hold the share. Why? Because it's a red circle. So in the future, when it turns white, then you leave, but you still make money, right? And if you miss the entry point in 60-minute chart, you can find your entry point in 30-minute chart. In 30-minute chart, we enter here, we exit here. So I do not make money and I do not lose money. And then the first red circle in here, I enter again, right? In here I enter, and now I still make money. In the future, if it goes down, and then I can choose to leave, but I still make money, right? So this is in 30-minute chart.
That's all for today, and this is Homely Cha. Our investment philosophy is index first, stock next, long-term first, short-term next. Operator familiar. If you like this video and then you want to see more video, please subscribe Homely Chat Malaysia. Thank you.